And welcome back. In yesterday's video, I gave you guys an update regarding some early indications of home buying demand. In other words, what we're seeing right now that could affect our housing market in the months to come. So for example, we're seeing fewer people search for homes for sale on Google. We're also seeing fewer home tours across North America, of course, in the US as well. And also the number of mortgage applications for home purchases are at the lowest levels since November of 2016. But in today's video, I'm going to give you guys an update regarding home prices, housing inventory, price reductions, and much, much more. And with that said, I have a lot to cover in today's video, so let's go ahead and dive right in. And this covers 400 plus US metro areas that Redfin tracks on a weekly basis here. And this data covers the 4 weeks ending September 4th of this year. And by the way, Redfin's data only goes back until 2012, by the way. So let's talk about home prices first. So the median sold price in the US is at $369,000 or just under $370,000, up only 6% on a year-over-year basis. This is more in line with the historical averages for home prices. Home prices tend to increase in the range of 3 to 6%. So this is more on the upper range regarding home prices right now. Again, these are based on sold houses, though, a lagging indicator. What the housing market was approximately 1 to 2 months ago when the home seller got their offer accepted. They also state here that home prices in San Francisco fell 7% year over year, though, the biggest decline since July 2022. Also in Oakland, which is in the San Francisco Bay Area as well, prices fell 1.4% on a year over year basis. And according to Redfin here, these are the only two metros that saw year over year declines in the median sold price. So one thing I want to mention regarding this is that Redfin does not track housing market updates for every single house that's sold in the US. So according to the 400 plus metro areas they track, only 2 metros saw decreases in home prices on a year-over-year basis, and that was San Francisco and Oakland. But when you look at the California Association of Realtors, for example, this is as of July 2022, of course, compared to July 2021. They track major regions in California or in the state. And they also look at different counties within this state as well. So I only mention this because it depends on the location you're looking at and the source you're looking at as well to see what's going on with the housing market here. I want to briefly touch on this here. So for example, in the San Francisco Bay Area, home prices decreased by 0.1% on a year-over-year basis. That's from July 2021 until July 2022. I realize we're talking about July stats here, and Redfin's stats covers the 4 weeks ending September 4th, so really August's stats. But to my knowledge, I'm not aware of any metro that saw increases in home prices in August. So I know it's not comparing apples to apples here, but I want to share this with you guys because there's approximately 11 counties within California where they saw home prices decrease on a year-over-year basis. That was these 4 counties here in the San Francisco Bay Area. Also saw decreases on a year-over-year basis in Butte County, Siskiyou, and Tehama County, as well as Amador, Calaveras, El Dorado, and Mendocino counties. So the reason why I bring this up is that there potentially may be other metros and also other counties within the US that saw decreases in home prices on a year-over-year basis. In any case, going back to Redfin's report here, it's pretty remarkable that home prices fell 7% on a year-over-year basis, and this is only one of 2 cities that are tracking here where home prices fell. So they fell pretty greatly over the past 12 months now. Meanwhile, the median asking price of a newly listed house increased 8% on a year-over-year basis, and also the monthly mortgage payment on the median asking price home was $2,337 per month at the current, keyword current, 5.89% rate. Right now, at the time of this video, which is Friday the 9th, average rates are approximately 6%, so they're not too far off right now. And the average monthly mortgage payment is still up 40% from 1 year ago when rates were only 2.88%. And here's some charts to share with you guys regarding home prices for these metro areas here. Here's the median sold price, again, only increasing by 6.2%. And as you can see right here, home prices or the median sold price has leveled out over the past couple weeks now. We'll see how this changes in the months to come. But as you can see here, home prices peaked really in June of this year when the median sold price was almost $400,000, but it has more or less been declining ever since then. As you can see right here, this trend with decreasing home prices over the past several months is drastically different compared to 2020 and also 2021. What happened in 2021 that I should mention is that in August, we reached very near record low mortgage rates. The average 30-year fix was approximately 2.8%, which is not too much higher than the approximately 2.75% that we hit in January 2021. Therefore, in my opinion, because we had record low mortgage rates back in August of 2021, that caused home prices to increase in November and December of last year. And meanwhile, the median asking price has increased 8.3% from 1 year ago. We're sitting at $377,000. The all-time record highs was just over $400,000 that was set around May and June of this year. But as you can see right here, just like for median sold prices, asking prices have been declining greatly as well, despite the fact we're seeing a huge increase of price reductions. And more on that here in just a little bit. And here's a chart showing average monthly mortgage payments as well. So we reached a peak back in June of this year when the average 30-year fix was at a year-to-date high of approximately 6.28%, according to the Mortgage News Daily. And it has been fluctuating a little bit over the past few months here. It went to lows we saw back in August of this year over the past couple of months. But more recently, though, this has been increasing because we saw a huge increase in mortgage rates as of late. So, for example, the average mortgage rate as of the beginning of August was 5.05%, and now it's 6%. Okay, changing gears slightly, let's talk about pending home sales, active listing inventory, as well as new listings. Let's first talk about pending home sales. So pendings were down 19% year over year, the largest decline since May 2020. Meanwhile, new listings were down 18% from 1 year ago, the largest decline also since May 2020. We're also seeing active listing inventory that actually fell 1.2% from the prior 4-week period, but on a year-over-year basis, they rose by 3%. Now, this is very interesting because despite the fact we have 3% more houses for sale in the US, despite that, we saw 19% fewer contracts being signed between home buyers and home sellers. Now, this is a similar trend we have been seeing over the past couple of months because we've been seeing more houses listed for sale this year compared to last year for approximately 2 months. But despite that, pending home sales have been declining. And this, of course, is due to home buying demand decreasing. So here's what I mean by that. Here's pending home sales this year compared to the past 2 years. Again, pendings are down 19.1% on a year-over-year basis and also down compared to 2020 as well. As you can see right here, ever since May of this year, pending home sales have been falling greatly. And what we're also seeing right now is a decrease of new listings. And check this out because this is pretty eye-opening. New listings are down 17.5% on a year-over-year basis and far below the past couple of years as well. And this is one reason why we're seeing this pullback in the growth of active listing inventory. We're not seeing enough new listings hitting the market, which is not causing inventory to increase. In fact, over the past couple of weeks now, active listing inventory, which of course is housing supply across the US, has been on a downward trend. Now, of course, this is drastically different compared to the start of this year because at the start of this year, we were down over 20% in the number of houses for sale compared to 2021. And as I alluded to in my previous videos here, part of the reason why we're seeing this softening in growth of active listings and more recently this decrease of active listings is because of this right here. We're not seeing enough new listings hitting the market to increase active listing inventory. And here's another trend we're seeing right now. Approximately 35% of pending home sales went under contract within the first 2 weeks of the house being listed for sale. In other words, the house sold very quickly. So right now that share is approximately 35% compared to approximately 40% in 2021 and 2020. And what we're also seeing right now is approximately 24% of pending home sales sold very, very quickly within 1 week of hitting the market. So about 23.5%. 2 years ago or last year and the year before that, the share was approximately 30%. But something definitely worth mentioning here is softening in the slowdown of this housing market slowdown, the lack of a better word. As you can see right here, the decrease here was going down greatly ever since June, but more recently though, it started to slough off here. Also for houses selling very, very quickly within 1 week, we saw a strong decrease ever since May of this year, but more recently though, we saw a slight decline as of July. And meanwhile, the median days on the market is at 27 days. So houses are selling approximately in 27 days on average in the US. Compared to 2021 at this time, that share was just over 20 days. What this is telling us is that it's taking longer for houses to sell compared to 1 year ago. In fact, it's taking approximately 5 days longer to sell a house compared to 1 year ago. Yet another sign that home buying demand is decreasing is that fewer houses are selling for over the seller's asking price. So in fact, only 35% of houses sold above their seller's asking price. And this is drastically different compared to May of this year, when that share was way over 50%. This is also drastically different compared to last year as well, because at this time last year, that share was 49%. So at 35% right now, selling over the seller's asking price, that means 65% are selling for the seller's asking price or less. And that leads me to the share of price reductions. So the share of price reductions is sitting at 7.3%. The all-time record high was set just a couple weeks ago when that share was 7.5%. Again, this is based on a weekly basis, so you have to multiply this by approximately 4 in order to get the monthly share. But again, what's interesting to note here is this trend right now is not going straight up, because back in April, the share of price reductions was only 2.5%, which was on par with last year's levels as well. So drastically different compared to April this year, where the share has basically been skyrocketing. But ever since August hit, again, this is when average mortgage rates decreased from approximately 6.3% in the middle of June down to 5% in the beginning of August. So the share of price reductions has been softening greatly over the past few weeks. A couple of reasonings that I have regarding this softening regarding price reductions is that potentially home sellers might be more cognizant of the fact that this housing market is actually slowing down, and therefore they're pricing their houses more aggressively to attract a home buyer. Maybe we're not seeing as many overzealous home sellers, for example. A second reason could be due to the fact that active listing inventory or housing supply has been decreasing. This causes a fewer competition amongst home sellers, and therefore if they're facing less competition amongst other houses for sale, that's going to cause them to not decrease their asking prices as they once did back in April through July of this year. Because in April through July of this year, housing supply increased greatly, causing more competition amongst home sellers. So comment below with your biggest takeaways from today's video. Also, if you guys got any value out of this video whatsoever, then please hit the like button. I greatly appreciate that. Hope you guys have an awesome day and look forward to seeing you on the next video.